All right. If you were a buyer of this XOSL fund, you should have already sold. Um, Unfortunately, I haven't been in position to make videos. I wasn't around. I've been in Hawaii. But here's why I say you sell. The market got down to 621. If you recall, I did a video about buying before the CPI report. If you would have bought just before the CPI report at 621, and I'll be honest, I had an order to buy at 6, and it didn't execute because it didn't get that low, and I was busy working. But in hindsight, I should have made time to buy that at the end of the day. That would be 12:30, 1 o'clock, or even you can trade after hours for a couple more hours still. So like 2, 3, or 4 o'clock. I think you should have made a buy that day. I actually wound up making a buy the next day, which cost me some. But what you want to do is, again, I thought the CPI report was not going to be as bad as it was thought to be, and it wasn't, and that's why the market shot up. Okay, but the reason why I'm saying you sell, if this is down at 621, you can see this chart, it pops up over 14. So you're talking about double your money in 1 month. If you double your money in 1 month, you could play that a couple ways. You could sell half your shares and just take everything off the table and then just ride it out long term. The reason why I would say you could ride it out long term is if you look at the 52-week high, we can still get all the way to 74 to get back to where it was. So I'd already been doing a lot of selling up at the higher price. Now I'm trying to reinvest back into this thing. And again, we're down. 621 was its 52-week low. Something I believe in that's on a 52-week low. It's hard for me not to want to buy. But on that same token, when it shoots up 100% in a month, I got to consider selling. Now, I would have sold only if the NASDAQ was up strong as well. If I got 100%, but the NASDAQ wasn't up strong, I would say I could afford to hold on, take a chance, and ride the wave if the NASDAQ goes up. But if you look at the NASDAQ chart, back on October 14th when I called to make that buy, since then, it was the low there. You can see the chart. Actually, if you go the day before, the low was like 10,000 something, and then on 11/15 it went up to here, which is around 11,000. So if that percentage jump is 10% or more, I would consider making a sell because on the NASDAQ, that's considered a pretty strong growth. Since it had that strong growth in the NASDAQ and we've made a ridiculous amount in the semiconductor fund, I would have been a seller here. But if you didn't buy back in here, then you kind of missed out. You just, so those big drops, when it dropped 200 points, that's a good time to buy back in. Anyways, again, you could have just got out of the game altogether on that if you were at a 100% jump. Even if you had bought here and it went up to here, it's not about how much you made. It's about how much that ticker symbol went up. So if that investment went up 100%, even though you didn't make 100%, it's still a sign you got to sell because you can't really expect this thing to go up 100% when the economy and the Fed is trying to drive the stock market down. So there's lots of room to grow, but there's still a lot of talk about the Fed's not happy about the stock market being up. They're saying that it's over resilient. It shouldn't be up as high as it is, and it's looking for excuses to continue to raise rates. Anyways, that's not what I want to talk about today. I just want to say, hey, this is a sell because the NASDAQ went up and the semiconductors went up. So what I do is I go and hit this historical data, and then you can see the prices, the highs and lows. And I go back. You can use it off of this chart here, or sometimes it's easier for me just to go off of this chart. I did the same thing with the NASDAQ. So what I do is I calculate the percentage of the NASDAQ, okay? How much gains that was. So again, I went off the low on 10/14 and off the high at 11/15 1 month later, and I made a spreadsheet. I have this all in my documents, but I got a lot of other stuff on there, so to not make it confusing, I simplified this and showed here on 11/15 where all these stocks were at that time on 11/15 on its high, and 10/13 when you could have bought on the CPI report just before that. So the high for the NASDAQ was 11,400. The low was 10,300. That's a 1,400 point gain, which is kind of mind boggling for me because back in the day, 1,400 point, that would take a whole year to get that much gain, which is a 14% rate of return. 10 to 15% is a really strong rate of return for an entire year. So getting over 12% is considered what the average is for a year. 15% in a month, that is a lot. And I took the numbers for the SOX and the tech and all these other ones at their highs to the lows. And what I did is I just created a formula where you take this minus this to get the difference. So that's your gains. And then you calculate the percentage by dividing this number from this number, and that gives you the percentage of 0.14. That's 14%. So then I could just take this whole thing and drag that across, and you'll see what we have for the formula. So SOXL, you're at 133% in 1 month. Tech Fund, 63%. That's outstanding. 63% in 1 month. That's outstanding. Nail, 58% in 1 month. Those are outstanding numbers. You might look at this and go, oh, well, these didn't do that good because look how good the SOX did. Yeah, the SOX did great, but not as great as, or the SOX did great. These Tech and Nail didn't do as great, but you compare it to Microsoft, in that same time frame, it didn't perform as well as the NASDAQ. It's down 1% of the NASDAQ, but still 13% gain is very respectable. 2% minus. So Tesla's actually lost money from its low and during that time. And then Boeing had a 42% jump, which is a great jump. That's outstanding numbers. But when I weigh in the risk to buy Boeing versus buying these funds, I'd rather buy these funds at a much lower risk and still got a higher percentage rate. This individual stock, 70% chance you're not going to make your money on that thing. So it's a risk to buy an individual stock. And then even Amazon didn't make any money. So let's do just one more. You'll see how I do this. You can track that yourself. We'll do LABU, okay? All right, so I'll come over here and we'll check the chart on LABU. So I'll do a quick look up on the chart for LABU. I like the Yahoo Finance. I recommend setting up an account. Back on 10/14, this is where it was. And that number is, it says up in the top left corner, the low is 645. So that low is 645. And the high on 11/15 got up to 819. So we'll put 819 for its high. I'll drag the formula over. You got 27% rate of return on the biotech. 27% rate, I'm ecstatic on 27% rate. 133, 63, 58, that's unreal. That was gifted money. You rarely get that chance to make that kind of money. So more than doubling your money on the semiconductor fund. Anyways, again, the reason why I say sell is, hey, you get over 100%. It's hard to imagine that you're going to keep making more money on that. If you want to write it out long term, one thing I do a lot of times is I'll just sell half of it and pocket my money. All my investment is back in my pocket, and I got nothing in the game. So whatever happens, happens. If it goes to zero, I never lost anything. But as long as it doesn't go to zero, I'll always have money in that account. If it goes back down, I can reinvest more into it. All right, so just wanted to go over why you want to sell. You got to be careful if it's a taxable account, and you should be selling these by the lots. You either do first in, first out, last in, or first in, first out, last in, first out, or specified lot. So let's just say, for example, on the SOXL fund, you had bought some here, anticipating this was a bottom at 921. And then it dropped down here, and you're like, holy cows, it's down to 6. I'm going to buy it at 7. So you bought at 9, and you bought at 7. If you do a sell here at 10, and you do nothing, it will do first in, first out. So if you had to buy a year ago, it would sell that one first. If you change it to last in, first out, it would sell the last one you bought at 6 and you would show a profit. But what I do to avoid taxes, especially in my tax account or just for logging for my own purpose, I sell a specified lot. So the lot I bought at 9 would be what I sold at 10. So I'd have hardly any gain showing, but I would be holding at a 6 or 7 price. Okay, so that's something you can talk about with your broker about how to sell lots. Maybe I'll do a demo sometime, but I like Charles Schwab because you can specify the lot at the time of the sell. With Ameritrade, you can do first in, first out, last in, first out. But if you want to sell a specified lot, you have to wait till the trade executes on the next day and then go specify your lot. And you got to be careful not to forget the next day. You only have, I think, a day or two maybe to change that to a specified lot. All right. This demo, though, was about selling the semiconductor. Just because you didn't make 133%, you got to figure that this fund has the potential of dropping down, and you lock in your 100% gains. All right. Hope that helps.